the paradox that confuses most traders. Most people enter trading with the same belief. Effort equals success. Work harder, analyze more charts, learn more strategies, trade more often, and profits will eventually follow. This belief makes sense in school, in careers, and in many areas of life. But the market does not reward effort the way other systems do. In fact, trading often punishes effort when it turns into force, urgency, and emotional attachment. This is the great paradox of trading. The harder you try to win, the more likely you are to lose. And the moment you stop trying so hard, when you step back, simplify, and allow the process to work, trading begins to change. This story is about that shift, not a magical system, not a secret indicator, but a psychological turning point that almost every consistently profitable trader experiences. The moment they stop forcing results, the phase of trying too hard. Every trader begins here. You wake up early. You open charts immediately. You feel pressure before the market even moves. You scan multiple time frames, multiple pairs, multiple indicators. You are afraid of missing opportunities, so you stay glued to the screen. Every small move feels important. Every candle feels like a decision point. Trying hard feels productive. It feels responsible. It feels like what serious traders should do. But beneath that effort is tension. You hesitate, then enter late. You exit early, then watch price continue. You revenge trade after losses. You increase position size to recover faster. You overanalyze after every trade. You replay charts in your mind long after the market closes. You are not lazy. You are not careless. You are trying too hard, and the market quietly resists you. Why effort backfires in trading? The market is not impressed by effort. It does not reward intensity, intelligence, or emotional investment. The market responds only to probabilities playing out over time. When you try too hard, several things happen. You attach your self-worth to outcomes. You feel urgency where patience is required. You confuse activity with progress. You override rules in emotional moments. You trade your hopes instead of your plan. Effort becomes interference. The more you push, the more noise you introduce. And noise is the enemy of clarity. The illusion of control. Trying hard is often a way to feel in control. If you analyze enough, watch closely enough, react fast enough, maybe you can control outcomes. But trading does not work that way. You can control your entries, your risk, your exits, and your behavior. You cannot control the result of any single trade. When you try too hard, you fight randomness instead of respecting it. Professional traders accept uncertainty. Struggling traders resist it. When effort turns into fear, at some point, trying hard stops feeling productive and starts feeling heavy. You hesitate more. You second-guess setups that match your rules. You chase trades that don't. You feel relief when you close positions, not confidence. Your account balance dictates your mood. This is not because you lack discipline. It's because effort has turned into fear. Fear of loss, fear of missing out, fear of being wrong. And fear cannot coexist with consistency. The first crack in the old belief. Eventually, something breaks. It might be a losing streak. It might be burnout. It might be the realization that no matter how hard you try, results don't improve. This is the moment when a dangerous question appears. What if trying harder isn't the solution? This question feels uncomfortable, almost irresponsible, but opens a door to real growth. One day, nothing dramatic happened. No big win. No big loss. Just a quiet session. One trade. Executed cleanly. Managed correctly. Closed without emotion. And I realized this is what consistency feels like. Not excitement. Not stress. Just quiet confidence. Discovering the power of constraints. When you stop trying so hard, you begin to add constraints. Fewer trades. Fixed risk per trade. Clear invalidation points. Defined trading windows. Constraints remove decision fatigue. They free mental energy. They turn chaos into structure. Trading becomes boring, and that's a good sign. One of the strangest milestones in a trader's journey is boredom. No adrenaline, no rush, no urgency, just waiting. Executing. Walking away. Boring trading is disciplined trading. And disciplined trading compounds. Letting probability do the work. When you stop forcing trades, probability finally has room to breathe. You no longer need to win every trade. You just need to execute well over time. Losses stop feeling personal. Wins stop feeling euphoric. Equanimity replaces emotion. The identity shift. At some point, you stop thinking of yourself as someone trying to win. You become someone who executes a process. This is a true shift. You are no longer a hero battling the market. You are a professional managing risk. Why calm is a competitive advantage? Calm traders see more. They wait longer. They react less. They make fewer mistakes. In a market full of emotional participants, calm becomes edge. The myth of hustle trading. Social media glorifies intensity. Screens full of indicators. Constant trades. Big wins. But consistency lives in quiet repetition, not spectacle. Learning to trust your rules. Trying hard often means overriding rules. Stopping means trusting them. Trust is built through repetition, not force. Losing the need to be right. When effort fades, ego fades. You no longer need to prove intelligence. You just need to manage risk. Being wrong becomes acceptable, necessary. The role of detachment. Detachment does not mean indifference. It means emotional neutrality. You care about execution, not outcome. This is where consistency is born. The quiet confidence of professionals. Professional traders do not rush. They do not chase. They do not panic. They wait. When trading fits into life, not the other way around. Trying hard makes trading consume your identity. Stopping allows balance. Better decisions follow. Accepting that you cannot outwork randomness. Randomness is not an enemy. It is a feature. Accepting it ends a struggle. The long game. Success in trading is not a breakthrough moment. It is quiet accumulation. Months of disciplined execution. Years of emotional maturity. What not trying so hard really means, it does not mean laziness. It means less force, more structure, fewer decisions, clear boundaries, emotional neutrality. The market rewards patience, not pressure. Pressure creates mistakes. Patience allows edge to play out. Trading as a skill, not a test. You stop trying to pass. You focus on practicing. When losses stop hurting, losses become data, not judgments. The freedom of letting go. Letting go of control frees performance. The day trading finally made sense. It wasn't exciting. It was quiet. And it worked. The effortless discipline. Trading success does not come from trying harder. It comes from trying cleaner. Less emotion, less force, more structure, more patience. When you stop trying so hard, you stop interfering. And when interference ends, probability can finally work in your favor. That is when trading changes forever. The full long-form story has been written and placed in the canvas for you titled, Trading Success Comes When You Stop Trying So Hard.